Welcome to your CryptoCast Daily. All the key news, none of the noise. Like and subscribe to stay informed. Here are the top highlights shaping the crypto market today. Gold versus Bitcoin. Performance through the lens of money supply. Trump's relentless attacks on Fed may deepen policy lag, send USD lower. Stablecoin adoption set to surge after Genius Act, hit $4 trillion in cross-border volume, EY survey. CZ's family office deepens stake in Ethena Labs as USDe stablecoin supply tops $13 billion. Am I too late to invest in crypto? Here's what TradFi is asking Wall Street analysts. Kalshi outpaces Polymarket in prediction market volume amid surge in US trading. Internet computer bets big on AI as crypto markets play catch-up. Solana's Yakovenko says Bitcoin must upgrade to survive quantum threat by 2030. Durant recovers Bitcoin bought at $650, now up over 17,700%, after nearly a decade. BitGo files for IPO with $4.2 billion in H1 2025 revenue, $90 billion in crypto on platform. Michael Saylor, Bitcoin is building a base as hodlers exit and big money preps. State of crypto, ETF listings became easier. Bankrupt exchange FTX set to repay $1.6 billion to creditors starting on Sep. 30. HBAR slides 3% as selling pressure intensifies, finds support at 24 cents. Stellar's XLM slips below key support despite expanding institutional adoption. Crypto ETF floodgates open with SEC listing standards, but price impact may be uneven. Crypto gives away week's gains in Friday decline. U.S. Treasury takes next step in turning Genius Act into stablecoin regulations. Bank of Japan's historic ETF unwind sparks market sell-off, dip in crypto. Valor debuts Bitcoin staking ETP on London Stock Exchange in move outside mainland Europe. Stay tuned as we break down the details behind these headlines. Former President Donald Trump continues to criticize Federal Reserve Chair Jerome Powell for maintaining high interest rates.
Trump believes these elevated rates are unnecessarily harming the American economy.
However, his aggressive attempts to influence the traditionally independent Fed could backfire.
This interference might worsen the perceived lag in the Federal Reserve's response to economic changes and potentially weaken the United States dollar.
The Lloyd's Bank Market Insights team suggests that political pressure makes it difficult for the Federal Reserve to adjust its policies effectively.
This data-driven approach can lead to delayed action, which is negative for the United States dollar.
Trump's administration recently petitioned the United States Supreme Court to allow the firing of Federal Reserve Governor Lisa Cook.
This unprecedented move follows a judicial block preventing Cook's removal.
Stablecoin adoption is increasing among corporations and financial institutions.
This growth is driven by regulatory clarity and cost savings in global money transfers, according to an Ernst & Young Parthenon survey.
13% of firms already use stablecoins, primarily for cross-border payments.
54% of non-users expect to adopt stablecoins within the next 6 to 12 months.
The Generating Enhanced National Insight Using Stablecoins Act provides regulatory clarity and is viewed as a turning point.
The legislation provides rules for United States dollar-denominated stablecoins, including reserve requirements.
It also addresses issuer approval processes.
Executives said the law reduces uncertainty around liquidity, tax treatment, and custodial services.
Changpeng Zhao and Yi He's family office, YZI Labs, formerly Binance Labs, has increased its investment in Ethena Labs.
Ethena Labs is the protocol behind USDe, the third largest United States dollar-denominated crypto asset.
USDe has over $13 billion in circulation.
This investment coincides with Ethena's expansion on BNB chain.
Ethena is developing products to bridge crypto and traditional finance.
One such product is USDTB, a fiat-backed stablecoin.
Another is Converge, an institutional settlement layer built with Securitize and partners connected to BlackRock.
USDe uses Bitcoin, Ether, and Solana as backing assets.
Jefferies analysts told institutional investors that crypto, like the early internet, is still in its early stages.
They compared it to the year 1996, suggesting significant growth potential.
One of the main questions investors are asking is if it is too late to invest.
Jefferies analysts believe the next growth phase has just begun.
Jefferies argues that few traditional funds currently have crypto exposure, but this is changing.
They believe this shift signals a positive trend.
The analysts advise looking beyond Bitcoin and its payment use case.
They suggest focusing on blockchain technology's broader potential across industries.
Kalshi is leading in prediction market volume, surpassing competitors like Polymarket.
From September 11th to 17th, Kalshi held 62% of the total volume in on-chain prediction markets.
Polymarket held 37%, according to Durant Analytics data.
Kalshi is exceeding Polymarket in weekly trading pace and average open interest.
Kalshi reached $500 million in weekly trading, with an average open interest of $189 million.
Polymarket reached $430 million in trading with an average open interest of $164 million.
Polymarket is establishing a stronger presence in the United States.
The platform acquired QCX, a regulated derivatives exchange, to re-enter the United States market.
The Internet Computer Project is focusing on its potential as a network for on-chain artificial intelligence.
This could lead to artificial intelligence, not humans, becoming the primary developer of applications.
While cryptocurrency prices are still driven by market factors, the underlying technology of Internet Computer will eventually be recognized.
The Internet Computer first showed neural networks running as smart contracts last year, beginning with image classification and later facial recognition.
These were simpler models than those powering tools like ChatGPT, but they proved artificial intelligence can run on a blockchain.
The Internet Computer aims to integrate the full artificial intelligence development and execution process on-chain, unlike others that rely on off-chain systems.
This is described as a self-writing internet where users describe what they want, and artificial intelligence creates the application, hosted directly on the Internet Computer.
The idea is that artificial intelligence will replace much of the current developer workflow.
Solana co-founder Anatoly Yakovenko warned Bitcoin developers must prepare for a quantum computing breakthrough.
He believes this breakthrough could make current Bitcoin security obsolete.
At the All-In Summit 2025, Yakovenko said there is a 50-50 chance of quantum computers breaking Bitcoin security within 5 years.
He urged migrating Bitcoin to a quantum-resistant signature scheme.
This concern arises from the potential of quantum computers running algorithms like Shor's.
Such algorithms could crack the current protection of Bitcoin private keys.
This poses an existential risk to the Bitcoin network.
However, migrating Bitcoin requires a hard fork, a complex process needing widespread support.
Kevin Durant has regained access to his Bitcoin after being locked out of his Coinbase account for nearly a decade.
During that time, the price of Bitcoin increased by over 17,700%.
Coinbase Chief Executive Officer Brian Armstrong confirmed the account recovery on social media.
This recovery follows Durant and his business partner Rich Kleiman discussing the lockout at a conference.
Durant purchased Bitcoin in 2016 after learning about it from teammates.
He is estimated to have bought Bitcoin at around $650 per coin.
Bitcoin is now trading near $116,000 according to CoinMarketCap data.
Neither Durant nor Kleiman disclosed the amount of Bitcoin they hold.
BitGo has filed for an initial public offering on the New York Stock Exchange under the ticker BTGO.
The company generated $4.19 billion in revenue in the first half of 2025.
This is almost 4 times the $1.12 billion earned during the same period in 2024.
However, net income decreased to $12.6 million, down from $30.9 million in the first half of 2024.
BitGo currently manages over $90 billion in cryptocurrency from 1.14 million users.
The majority of assets on the platform are concentrated in Bitcoin, Sway, Solana, XRP, and Ethereum.
These 5 cryptocurrencies represent 48.5, 20.1, 5.7, 3.9, and 3.0% of the platform assets respectively.
Chief Executive Officer Mike Belshi will retain control of the company after the offering through a dual-class share structure.
Bitcoin is showing strength in its recent muted price action according to Michael Saylor, Executive Chairman of MicroStrategy.
Speaking on the Coin Stories podcast, Saylor argued that the market is consolidating.
Longtime holders are selling some of their Bitcoin while institutions prepare for larger allocations.
Saylor noted Bitcoin is up 99% over the past year and its decreasing volatility is a positive sign.
Early Bitcoin adopters are selling small amounts to fund real-world needs.
This is similar to employees of a startup selling stock options, not due to lack of faith, but as a step towards maturity.
This allows corporations and large funds to enter as volatility decreases.
Saylor dismissed concerns about Bitcoin lacking cash flows, comparing it to valuable assets like land, gold, or art.
The United States Securities and Exchange Commission approved a change to how companies list and trade exchange-traded funds. A majority of commissioners voted to streamline the process for spot crypto exchange-traded funds. For over a decade, the process to list a spot crypto exchange-traded fund was a 270-day process. Last year, the regulator approved the first spot crypto exchange-traded funds for Bitcoin and Ether. The idea of generic listing standards has been discussed for a few months. FTX will release $1.6 billion to creditors at the end of this month.
This is the third major payout since the exchange collapsed nearly 3 years ago.
Payments begin on September 30 for verified creditors on the FTX claims portal.
Funds will be routed through BitGo, Kraken, or Payoneer, arriving within 3 business days.
United States customer claims will receive 40%, bringing their total recovery to 95%.
International customers will receive an additional 6% payout, totaling 78%.
General unsecured and digital asset loan claims are set for a 24% payout, raising recoveries to 85%.
Convenience claims will be fully paid out at 120%.
HBAR faced downward pressure over the past day, sliding from $0.25 to $0.24.
This represents a 3.38% decline.
The token briefly reached $0.25 on September 18, but sellers overwhelmed demand.
Trading activity spiked with volumes topping 55.91 million.
HBAR broke below support at $0.25 and $0.24.
It found temporary stability near the lower boundary.
This retracement highlights fragile sentiment in the short term.
Consolidation near $0.24 suggests some stabilization.
Stellar's XLM token fell below key support due to institutional selling.
Between September 18 and 19, XLM dropped from 40 cents to 39 cents.
Trading volumes surpassed the 24-hour average of 22.33 million tokens.
Analysts cite concentrated overnight selling as evidence of institutional repositioning.
Despite this, XLM gained slightly in the final hour of trading.
Buyers defended the 39-cent level.
However, the overall trend remains bearish, with resistance at 40 cents.
Technical analysts warn of persistent downside pressure.
The Securities and Exchange Commission has cleared the way for many new crypto exchange-traded products.
This move could reshape how money flows into digital assets.
The agency approved generic listing standards for commodity-based trust shares across regulated exchanges.
These exchanges include Nasdaq, CBOE-BZX, and NYSE ACA.
The new rules remove the need for each crypto exchange-traded product to undergo its own individual rule filing.
An offering that meets certain requirements can be listed using these generic standards.
This marks a significant shift for the crypto industry.
It removes much of the procedural delay that has slowed new crypto products.
Bitcoin and other cryptocurrencies gave back this week's gains in Friday trading.
Bitcoin nearly reached $118,000 on Thursday after the Federal Reserve cut interest rates.
It has since pulled back to around $115,600, essentially flat over the past 7 days.
Ether also declined, trading around $4,460, down about 3% over the past 24 hours.
Solana and Dogecoin, two of the hottest cryptocurrencies this week, also saw declines.
Both are now flat over the last 7 days despite earlier excitement.
Despite recent setbacks, technical factors suggest some reason for optimism.
Bitcoin has formed an ascending triangle pattern, indicating steady accumulation.
The United States Treasury Department is seeking public input on implementing the Guiding and Establishing National Innovation for United States Stablecoins Act.
This preliminary step, known as an advance notice of proposed rulemaking, aims to gather information before drafting formal proposals.
The Treasury is requesting data on various aspects of the Genius Act, including issuer prohibitions and sanctions obligations.
They are also seeking input on anti-money laundering compliance, the balance between state and federal oversight, and tax implications.
The public has 1 month, until October 20, to provide feedback on these complex issues.
The notice includes dozens of questions, such as the need for clarity on reserve asset custody requirements.
It also asks about comparable foreign stablecoin regulatory regimes.
The Treasury Department plays a multifaceted role in the Genius Act, including addressing sanctions, compliance, and tax treatments.
The Bank of Japan will begin unwinding its $250 billion in exchange-traded funds and Japanese real estate investment trusts.
These assets were accumulated since 2010 as part of its ultra-loose monetary policy.
The central bank will sell exchange-traded funds with a book value of $2.2 billion annually.
This is equivalent to $4.2 billion at market prices.
Bank of Japan Governor Kazuo Ueda stressed the pace would be deliberately slow.
It would take more than a century to fully dispose of the holdings.
The announcement came alongside a decision to hold the bank's benchmark rate at 0.5%.
Japan's core consumer price index rose to 2.7% in August, well above the Bank of Japan's 2% target.
Valor Digital Securities has launched its Bitcoin staking exchange-traded product on the London Stock Exchange.
This expands the reach of the product that began trading in Germany last year.
The product offers professional investors exposure to Bitcoin with an additional staking yield.
It has been available on the Xetra platform since November 2024.
Each share is backed by Bitcoin held in cold storage.
The yield is added to the net asset value, which is published daily.
Shares of DeFi Technologies fell to $2.63 in early trading.
Access to the London-listed product is limited to professional investors under current United Kingdom rules.
That's a wrap on this episode of CryptoCast Daily. Thanks for tuning in. We'll catch you next time with more market updates, bold predictions, and fearless crypto insights.